Hey everyone, welcome back. Ready for another deep dive?
Always ready.
Today we're digging into PNB Housing Finance Ltd, looking specifically at Q3 of fiscal year 2025.
Fresh numbers. We've got the investor presentation and the regulatory filings just released today, January 21st. Hot off the presses.
So brand new insights. What we're going to do is pull out the key takeaways, give you kind of like a behind-the-scenes look at how PNB Housing Finance is doing and what they're up to strategically.
Yeah. The investor presentation starts with the big picture. They're aiming for growth. PNB Housing Finance, that is. Specifically, they're looking at retail loan assets, zeroing in on what they call the emerging markets and the affordable segments.
Interesting. So focusing on those segments, huh? Why those two specifically?
Well, they already have a strong presence in what they call the prime segment, so they're kind of using that experience to tap into these newer markets. And, these segments tend to have higher yields, which means, more potential profit.
Got it. So more potential profit, that's always good. But is it actually working? This strategy, I mean.
Let's look at the numbers. Overall, retail loan assets grew by 17.5%. That's year over year. Reached INR 70,676 crore.
17.5%. Not bad.
Yeah.
But I'm guessing those targeted segments, the ones you mentioned, probably tell a more interesting story.
You would be right. The prime segment had steady growth 11.3% year over year, which is good. But the emerging market segment, that one grew 22.5% year over year.
Nice. And the affordable segment, what about that one?
Get this, they saw a whopping 234% growth.
Whoa, 234%. That's not just growth, that's an explosion.
Exactly. So to really understand those numbers, let's break down each segment, starting with emerging markets, maybe.
Yeah, let's do that. What makes emerging markets so special?
Well, they actually carved it out from the prime segment at the beginning of the fiscal year Q1. Seems like they recognized the potential early on, and that potential is definitely translating into results. Disbursements are up 39% year over year. Loan assets in the segment jumped 23%.
So basically, taking what they've learned in the prime segment and applying it to a whole new market. Smart.
Very smart. Oh, and there's another interesting thing, the incremental yield, right? They're getting in this emerging market segment. It's actually 41 basis points higher than in the prime segment. Basically, for every rupee lent, they're earning more in this new segment.
Okay, so for someone who doesn't think about finance 24/7, what does that actually mean? Why should we care about the difference in yield?
It all comes down to profit. Higher yield means higher profits for PNB Housing Finance. It's a sign that the strategy is working, at least from a financial standpoint.
More profit is good. All right, let's talk about that other segment, the one with that crazy 234% growth, the affordable segment.
Yeah, this is where things get really interesting. They've branded it as Roshni, and it's been a story of rapid expansion. They started with a tiny disbursement amount, just INR 5 crore, and now they've crossed the INR 3,000 crore loan asset mark in a really short time, hitting major milestones.
Wow, it's like they're building a whole new business within a business. What's fueling this growth?
Well, they've hit a disbursement run rate of INR 100 crore per month. That's pretty significant. And, to reach more customers, they've expanded their branch network from 100 to 161 branches. Just for Roshni.
234% loan asset growth, 127% disbursement growth, over 60 new branches. These are some pretty wild numbers.
They are, and their distribution strategy is worth talking about, too. They're using a network of what they call Sarathis. Think of them as connectors within communities. These Sarathis, along with channel partners and processing partners, help them reach customers in areas that traditional banks might not be able to access as easily.
Makes sense. It's like they're building relationships at a local level, building trust.
Exactly. Oh, and another interesting thing, the contribution of the top 5 states to the affordable segment's loan assets. It actually decreased.
Wait, wouldn't you want your top performing states to, contribute more?
Not necessarily. It means they're diversifying geographically, not putting all their eggs in one basket. It's a sign of, a smart risk management approach.
Makes sense. Spread things out.
Yeah.
Especially when you're growing that fast.
Yeah, exactly. Now, let's switch gears a bit. Talk about asset quality, which is, essential for any financial institution.
So moving beyond just the growth numbers now.
Right. PNB Housing Finance is really emphasizing technology to improve their credit underwriting process and their collection strategy, too. They're trying to make sure they lend responsibly, minimize any potential losses.
Sounds like a good plan. But how does technology actually play into that?
In a lot of ways. They're using things like automated eligibility calculations, based on a credit appraisal memo and a bank statement analyzer. There's a business rule management engine for validation, and they're even using digital outputs in their loan operating system for collateral assessment. So lots of tools to assess risk and streamline things.
So it's not just a yes or no on a loan. It's about making smarter decisions,
Yeah,
using data.
exactly. And it's working. 84% of the loans they booked in Q3, they had a bureau score of over 700.
Okay, so remind me, what does that score tell us?
It basically measures creditworthiness. The higher the score, the more likely someone is to pay back their loan. So that 84%, that shows they're getting better at picking good borrowers, attracting people with solid credit histories.
Gotcha. So being careful about who they lend to. What about loans that, well, maybe don't go as planned?
That's where their focus on collections comes in. They're emphasizing early bucket cash collection, pre-NTA resolution, and even recovering funds from loans that have been written off. So they're really trying to minimize losses, keep their portfolio healthy.
Interesting. Sounds like they're really focused on the new loans coming in, but also working hard to manage the loans they already have.
Right. And it's working. Their non-performing assets, NPAs, they've been decreasing.
Just from my memory, NPAs are basically loans that aren't being repaid like they're supposed to, right?
Yeah. That's it. So their gross NPA, the total percentage of loans that are non-performing, is down to 1.19%. And their net NPA, which takes into account provisions for potential losses, that's even lower, 0.80%.
Wow. That's pretty low. So it seems like they're doing a good job of managing those potential problems.
They are. And get this, their corporate NPA is at 0. None of their corporate loans are currently non-performing. It shows how strong their risk management is.
0.
Yeah.
Wow. That's amazing. You don't hear that very often. Okay, so we've talked about growth and managing risk. Now let's zoom out a bit and talk about their technology vision, because it seems to be a big part of everything we've discussed.
Yeah, PNB Housing Finance wants to be a leader in the digital space, specifically for housing finance companies. They want to use technology to really transform their operations and to make things better for their customers.
Okay, so a big goal. How are they making that happen?
Well, they've outlined a few key areas. One is something they call frictionless customer experience. That's about making everything easy for customers, from applying for a loan to repaying it. They also want end-to-end sales enablement, giving their sales teams the tools and technology to do their jobs better. And of course, they're big on underwriting at scale and data-driven enterprise, which basically means using data and analytics to make smarter decisions across the board.
Okay, so they want to be more efficient, more customer-focused, and more data-driven.
Exactly. And they've been upgrading their technology to support all of this. Like, for example, they just upgraded their loan management system to the latest version. It's like they've given their whole tech infrastructure a major boost.
Makes sense. Now let's get to the part everyone is always waiting for, the financials, the bottom line. Are they making money?
The short answer is yes, and they're doing pretty well. Their net interest income, the difference between what they earn on loans and what they pay on borrowings, increased to INR 696 crore in Q3. That's a 17% increase year over year.
17%, not bad at all.
Yeah.
And what about their actual profit?
Their profit after tax surged to INR 484 crore, a whopping 42.9% increase compared to last year.
Wow, almost 43% profit growth. Those are seriously good numbers. What's behind all of this success?
It's a mix of things, really. Their focus on those higher-yielding segments is playing a role, for sure, as is their emphasis on improving asset quality. And their technology investments are paying off, making them more efficient.
Okay, so it's not just one thing. It's a whole set of strategic moves that are all working together.
Right. And their return on assets, or ROA, is also very healthy. This is a key measure of how well they're using their assets to generate profit. Their ROA for Q3 stands at 2.51%, annualized, of course.
Okay, remind me, what does that actually tell us? Why is it a good thing?
A higher ROA means they're generating more profit for every rupee of assets they have. It's a good sign. To give you some context, their ROA for all of fiscal year 2024 was 2.2%, so they're already exceeding that. And we're only 3 quarters into FY25.
Wow, okay. So their profit's up, their ROA is up. Sounds like everything's moving in the right direction.
It is. And remember, those efforts to recover funds from written-off loans, they've been very successful at that too. They recovered INR 53 crore in Q3 alone, bringing their total for the first 9 months of the year to INR 181 crore.
I had no idea you could recover that much from loans that were basically considered lost.
Yeah, it's not always easy, but it shows they're really committed to maximizing value. Those recovered funds go straight to the bottom line, boosting profitability.
That's impressive. Okay, before we move on, I want to quickly touch on something that was mentioned in their materials, governance and ESG.
Oh yeah, ESG. That stands for Environmental, Social, and Governance. and it's becoming really important for companies, including financial ones.
I've definitely heard a lot about ESG lately. To be honest, I'm still not totally clear on what it means for a company like PNB Housing Finance.
It's all about operating in a way that's sustainable, responsible, ethical. They have to consider the impact of their business on the environment, on society, on their stakeholders.
So not just about making money, but making money in the right way.
Exactly. And PNB Housing Finance seems to be taking it seriously. They have a risk management committee that oversees their risk management practices to make sure they're operating safely and responsibly.
Good to hear. What about the other parts of ESG, the environmental and social stuff? What are they doing on those fronts?
Well, they've created a whole ESG framework. It outlines their commitments and goals. They're trying to reduce their environmental impact and create a positive social impact through different initiatives.
So it's not just talk, they're actually doing things.
Yeah, they have a whole ESG dashboard that tracks their progress. It's a very transparent way to show they're serious about this.
That's interesting. Can you give me some specific examples of what they're doing? What's on that dashboard?
Sure. For example, they're giving AI-powered smart vision glasses to people who are visually impaired. And they've launched this digital Sha'ala program. It teaches digital literacy to students in underprivileged communities. Over 6,000 students already. And these are just a couple of examples.
Those are really cool initiatives. It's great to see a company using its resources to make a difference.
Okay, so we've covered a lot. Growth strategies, asset quality, technology, financials, and even ESG. Sounds like PNB Housing Finance is doing really well.
They are. But remember, this is just part one of our deep dives. We still have a lot more to explore. Their borrowing profile, their management team, and their place in the Indian housing finance market as a whole.
Can't wait. Let's take a quick break and then we'll come back and dig even deeper into PNB Housing Finance. All right, so we've seen how PNB Housing Finance is targeting growth, managing risk. But what about the money they're using to fund all of this? Where's it coming from?
That's a great question. It all comes down to their borrowing profile. You know, how they raise the funds to lend to customers. And PNB Housing Finance has pretty good mix. Diversified, you could say?
Which is a good thing.
Diversified, so they're not relying on just one source.
Right. They're tapping into all sorts of sources. Refinancing from the National Housing Bank, term loans from other institutions, external commercial borrowings, deposits from customers, non-convertible debentures, commercial papers.
Okay, a lot of financial terms there. But I get the idea. They're not putting all their eggs in one basket.
Exactly. And that helps them manage risk. If one source dries up or gets too expensive, they have other options.
Makes sense. So they've got the money to lend, they're lending it wisely, they're making a profit.
Yeah.
But how do we know they can keep this up?
That's where some other key indicators come in, like their investor presentation talks about their liquidity coverage ratio averaged 193% for Q3, which is pretty impressive.
Hold on. Back up. Liquidity coverage ratio, what is that?
Think of it as a stress test. It measures whether a financial institution has enough high-quality liquid assets to cover its short-term obligations. Like, can they meet their commitments if things get tough?
Ah, okay. So a higher LCR means they're more stable, less likely to run out of cash.
Right, and 193%, that's way above what's required, shows they have a strong liquidity position.
Got it. So they're growing, but in a sustainable way, with a nice cushion, just in case.
Exactly. And their statutory liquidity ratio, which is the percentage of deposits they have to keep in liquid assets like government securities, stands at 15%.
Okay. Meeting requirements. Got cash on hand, borrowing profiles diversified. Seems like they're in a pretty good spot.
Yeah, they are. And on top of that, they got sanctions from both the National Housing Bank and for external commercial borrowings during the quarter. Gives them even more flexibility.
Always thinking ahead, making sure they have the resources they need.
Now, none of this would be possible without the right people running the show.
Right. What can you tell us about the team at PNB Housing Finance?
They've got a really experienced management team, deep understanding of the retail lending business. A lot of them have been with the company for a long time, seen a lot of different market cycles.
That kind of experience is really valuable, right?
Yeah.
Especially in housing finance.
Absolutely. And they have a diverse board of directors, too. Expertise in banking, finance, law, tech. It's a well-rounded group.
So they've got the financial smarts, the legal know-how, and the tech savvy to keep up with the times.
Yeah, it's a good mix. And it seems like they're working well together, which is obviously important.
You know, we talked about growth in financials, but I'm curious about those efforts to recover funds from written-off loans. It's not something you hear about every day.
It's definitely unique. And they've been really successful, recovered like INR 53 crore in Q3 alone. bringing their total for the first 9 months of FY25 to INR 181 crore.
That's a lot of money.
Yeah.
How do they actually go about recovering those funds?
Well, they have a whole team dedicated to it.
So it's not just a side project. They're serious about it.
Yeah, they work with legal teams, to pursue legal options. They explore things like property sales. It's a whole process. Requires expertise.
Leaving no stone unturned.
Mm.
And that commitment to maximizing recovery, it really contributes to their financial health overall.
For sure. It's also a sign of good risk management. They're not just giving up on these loans. They're actively trying to recover as much as they can.
Now, one thing we haven't talked about is competition. Where does PNB Housing Finance fit in the bigger picture of the housing finance market in India?
It's a good question. The Indian housing finance sector is pretty competitive. A lot of players, public and private. Some of the big names are HDFC, LIC Housing Finance, State Bank of India, ICICI Bank, Axis Bank.
So they're up against some big players. How do they stand out in a crowded market?
Well, they're one of the leading housing finance companies in India. Got a good reputation and a wide network.
Okay, so name recognition and reach. What else?
Their focus on those higher yielding segments, emerging markets, and affordable, that's a key difference. They're going after markets with a lot of potential while still being careful about risk and profitability.
They've found their niche, and they're doing well in it.
Right, and their tech investments are giving them an advantage too. They're really embracing the whole digital thing, using cloud computing, APIs, data analytics. It's all about being more efficient, more customer-focused, and more adaptable.
So it's a combination of things. Focus, technology, and of course a good team to make it all happen.
Exactly. And we can't forget their commitment to ESG. It's important for companies to show they care about sustainability, responsibility, good governance. And PNB Housing Finance is doing that.
Okay, we've covered a lot of ground. They're growing, they're profitable, managing risk, committed to ESG. But I want to dig a little deeper into their technology strategy because it seems like a key part of their success.
Yeah, they call it IT 2.0. It's all about using technology to transform how they operate and create a seamless digital experience for their customers.
So it's more than just upgrading systems, it's a whole new way of thinking.
Right. They have a few key pillars for this IT 2.0 vision. One is frictionless customer experience, making everything easy and intuitive for the customer, from applying to managing their loan.
That's a big deal. Nobody wants to deal with complicated processes.
Nope. And they're doing it through online applications, digital documents, mobile repayment options, all about convenience.
That makes a lot of sense. So what are some of the other pillars of their tech strategy?
Another focus is end-to-end sales enablement. They're giving their sales teams the tools they need to be more effective. Things like mobile CRM systems, lead management, digital marketing platforms. It's about empowering their sales force.
Okay, streamlining things for customers, empowering the sales team. What about the actual loan processing? How does tech fit into that?
That's where underwriting at scale and data-driven enterprise come in. They're using data and analytics to automate their loan approval processes. Things like automated eligibility checks, risk scoring models, digital document verification.
So they're using tech to make smarter lending decisions.
Yep. Reducing manual work, making approvals faster, and keeping things consistent.
And I imagine this helps them manage risk better too.
Absolutely. With data-driven models, they can assess the risk of each loan more accurately.
Speaking of risk, their borrowing profile seems pretty strong. Diversified mix of funding sources, NHB refinancing, term loans, ECBs, deposits, all that.
Yeah, it's a balanced portfolio. Reduces their reliance on any one source. That's really important, especially if things get shaky in the economy.
It's like a safety net.
Right. And their commitment to liquidity is another part of managing risk. Remember that impressive liquidity coverage ratio?
193%. Yeah, that's a good sign that they have enough liquid assets to cover their needs, even in a crisis.
Exactly. Shows they're managing things well. Focused on having a strong foundation.
Okay, they've got the technology, the funding, they're managing risk. What about the people behind all of this?
Ah, yes. The human element. Well, PNB Housing Finance has a really experienced management team. They've been in the housing finance sector for a long time.
So they've seen it all, the good times, the bad times.
Pretty much. Economic cycles, regulatory changes, market ups and downs.
That's got to be valuable. Gives them a good perspective on things.
For sure. They can anticipate trends, adapt, make good decisions.
And they seem to have built a culture that values both performance and sustainability. That strong ESG framework, the social initiatives, the focus on diversity.
It's definitely encouraging. They're not just focused on profits, but on doing things the right way.
Yeah, it's one thing to talk about ESG, it's another to actually do it. And PNB Housing Finance seems to be walking the walk.
Agreed. Those initiatives like the smart vision glasses and the digital Shala program, those show real commitment.
Okay, so let's shift gears a bit. Take a closer look at their asset quality. Remember those impressive NPA reductions?
Oh yeah, their gross NPA is down to 1.19%. Net NPA even lower, 0.80%. And their corporate NPA is 0.
Those are amazing numbers. What's the secret? How are they doing it?
It's a multi-pronged approach. Technology is a big part of it, but it's more than that. Dedicated teams focused on early intervention, pre-NPA resolutions, even recoveries from those written-off loans.
So they're not waiting for things to go bad, they're being proactive.
Exactly. They're using data to spot potential issues early on.
Makes sense. Catching problems early is always better.
Right. And that focus on pre-NPA resolutions is key, too. They're working with borrowers who might be struggling financially to restructure loans, help them get back on track.
So it's about working with people, finding solutions.
Yep. And their recovery efforts are impressive. INR 53 crore in Q3 alone, INR 181 crore in the first 9 months of FY25. Shows their dedication, doesn't it? They're really trying to maximize value, minimize losses.
Now let's zoom back in on those high-growth segments we discussed. Starting with the prime segment, they've got a long history there. Strong brand, deep understanding of the customers.
Absolutely. The prime segment is their foundation, and they're using that experience to expand, especially into the emerging market segment.
They carved it out from prime in Q1 to really focus on it, right? Because of the higher yield.
That's right. And it's working. Disbursements and loan assets are growing quickly.
And they're getting better yields compared to the prime segment.
It's a smart move. Diversifies their portfolio, taps into markets with lots of potential.
Now, let's talk Roshni, their affordable segment.
This is where things are really taking off. They've grown incredibly fast, from a small program to a major player in affordable housing finance.
It's been amazing. They've hit that INR 100 crore per month disbursement run rate. Loan assets have crossed INR 3,000 crore.
And they're expanding rapidly. With that network of Sarathis, channel partners, and processing partners, reaching customers in all those Tier 2 and 3 cities.
Right. They're reaching customers that traditional banks often miss.
And they're being strategic about it, diversifying geographically so they're not too concentrated in any one state.
Smart move. Helps manage risk, keeps the portfolio balanced.
It's clear they've put a lot of thought into their approach, which is crucial in this segment.
Absolutely. Building relationships, leveraging technology, offering the right products.
And it's working. Their growth in the affordable segment is phenomenal.
They're clearly meeting a need
Mm-hmm.
and doing it in a sustainable, responsible way. And that commitment to financial inclusion shows in their customer base.
Yeah.
Lots of women borrowers. And they're reaching out to customers in those lower income groups.
It's a good balance, isn't it? Growth and social impact. They're not just about the profit, they're trying to make a difference.
Okay, so we've looked at growth, risk management, tech, ESG. Let's talk about the bottom line, financial performance.
Their Q3 FY25 numbers are very encouraging. Net interest income is up, profit after tax is up, all the key ratios are looking good.
Let's break it down. Net interest income was INR 696 crore. That's a 17% jump from last year.
Yep, and profit after tax was INR 484 crore, a 42.9% year-over-year increase.
Wow, impressive. What's driving that performance?
It's a combination of their growth strategy, focus on asset quality, tech investments, and cost management.
So it's all working together.
Exactly. And their key financial ratios look good, too. Return on assets is up to 2.51% for Q3, annualized. Shows they're using their assets efficiently.
And those recoveries from the written-off pool are helping too.
For sure. INR 53 crore in Q3 alone, bringing their total for the first 9 months to INR 181 crore. It all adds up.
Okay, before we wrap up this part, I want to touch on their shareholding pattern. Their presentation highlighted some key stakeholders.
Right. Their major shareholder is Punjab National Bank. Their promoter holds a significant stake.
And some big global names are invested too, right?
Yeah, Carlyle and GIC Singapore are key investors. And there's a good mix of others. Mutual funds, foreign institutional investors, public shareholders.
That kind of diverse shareholder base is a good thing, right?
It shows confidence in their business model and their growth potential.
It also suggests good corporate governance.
Exactly. Transparency, accountability, all that. PNB Housing Finance is well managed, well funded, and well positioned for the future.
All right, we've covered a lot in this part. Borrowing profile, management, competition, technology, shareholding.
And we went deeper into asset quality, growth strategies, financial performance.
It's clear PNB Housing Finance is doing really well. They've got a vision, a strong team, and they're delivering results.
Their focus on sustainability, financial inclusion, and digital transformation is setting them up for continued success.
But, got to play devil's advocate here. What are some potential risks? What challenges could they face?
Well, no business is without risk. The economic environment is always a factor. Interest rates, the housing market, competition.
True. New players are entering the market. Existing players are getting more innovative. It's a dynamic market.
They'll have to stay ahead of the game.
And their technology investments, while they're a strength, they also present potential risks. Cybersecurity threats are always a concern.
Good point. They need to invest in security to mitigate those risks.
Okay, those are all valid concerns. But overall, I'm still feeling pretty optimistic about PNB Housing Finance.
Me too. But like with any investment, you got to stay informed, watch their performance, be aware of both the opportunities and the risks.
Great advice. So to wrap up this part of Deep Dive, what are some key takeaways about PNB Housing Finance's position?
They're one of the leaders in the Indian housing finance market. Strong brand, wide network, proven track record.
And they're standing out by focusing on higher-yielding segments, investing in technology, and committing to ESG.
They've got a solid financial foundation, diverse borrowing, and a strong management team.
Okay, I think we painted a pretty good picture, but there's one more area I want to touch on before we wrap up this whole deep dive: their commitment to ESG.
Yeah, ESG is becoming really important. Investors are looking beyond just the numbers. They want to see companies doing things the right way.
Right. It's about responsibility.
Exactly. And PNB Housing Finance is taking it seriously. They have a whole framework, a dashboard to track progress, and they're actively working on initiatives that have a positive impact.
I'm curious about that ESG dashboard. What kind of information does it actually provide?
It's very detailed, outlines their initiatives and progress on all sorts of ESG metrics. It's all very transparent.
So it's not just vague statements. It's real data, specific examples.
Right. Covers everything from their carbon footprint to diversity and inclusion efforts to community programs to corporate governance.
That's impressive. It's good to see that level of transparency.
Definitely shows they're serious about ESG and that they want to keep improving.
All right, I think we've covered pretty much everything. Any final thoughts before we wrap up this deep dive?
PNB Housing Finance is a company on the move. Strong growth, healthy financials, a good team, commitment to innovation, and a real focus on ESG.
Sounds like a company to watch.
Absolutely. But remember, the market is always changing. So stay informed, do your research, make your own decisions.
Good advice. Well, there you have it, folks. Our deep dive into PNB Housing Finance Limited's Q3F25 performance. We covered a lot today.
I hope you found it helpful.
I know I did. It's been really interesting to learn about this company, but now it's time for us to sign off.
Thanks for joining us.
Okay, so we've seen the numbers, we've seen the strategies, but what does all this mean for, the average person, someone who's interested in PNB Housing Finance?
Yeah, good question. That's why we do these deep dives, right? Give you the information you need.
Exactly. We've gone through a lot: financials, growth, technology. What are the big takeaways? What should people be thinking about?
Well, one thing that really stands out to me is how PNB Housing Finance is balancing growth with profitability and responsibility. They're not just growing for the sake of growing.
Right. They're focused on those higher yielding segments, but they're not taking crazy risks. Their NPAs are low, their borrowing is diversified.
And they're thinking about the bigger picture. Their ESG commitment is strong. It's part of how they do business. They're not perfect, no company is, but they're trying to do things the right way.
Yeah. And those technology investments are paying off. They're embracing the digital world. That's got to give them an advantage in the long run.
Absolutely. Making things easier for customers, giving their employees better tools.
So taking all of that into account, what do you think is the biggest risk for PNB Housing Finance going forward?
Well, like any company, they've got to deal with the economy. Interest rates, the housing market, competition, those are always challenges.
True. But they seem to have a good foundation, a strong team. They've been through tough times before.
Exactly. They're adaptable. And they're making strategic decisions to prepare for the future.
Okay, so as we wrap up this deep dive, what's the one question people should be asking themselves about PNB Housing Finance? What should they be thinking about?
Does PNB Housing Finance fit with my own investment philosophy? Does it match what I think the future looks like?
That's a good question. Because it's not just about the numbers, right? It's about whether you believe in what the company is doing.
Exactly. Do you like their strategy? Do you agree with their commitment to ESG? Do you think their technology investments are smart?
Those are the questions that will help you decide if it's the right investment for you.
And remember, this deep dive is just the beginning. You've got the information now, but do your own research. Think about your own goals.